Let's go. Yeah. I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same.
All right, y'all, happy Thursday, May 15th. How's everybody doing? Long time no see. While we're waiting for some folks to come in to the chat, let's see if I can get a song
and
playing
to
here.
The right, up and to the right, up and to the right.
Hello, millionaires. Short screenplays where fortunes flip. GameStop's journey, an epic trip. From humble roots to the moon we fly. A company's dream will amplify. Reddit warriors, keyboards in hand. With their eyes on the prize, they took a stand. No one's selling, we're here to fight. How does it go? Up and to the right. Up and to the right. We're in for the ride. It stops on the rise. It can't be denied. Up and to the right. Through the day and night. Together we'll soar. Molasses in sight. Up and to the right. We're in for the ride. It stops on the rise. It can't be denied. Up and to the right. Through the day and night. Together we'll soar. Molasses in sight. Hedge funds trembling, Kenny's in shock. GameStop stock, you'll never stop. From diamond hands to rocket ships, we're not selling, we buy every dip. Up and to the right, we're in for the ride. Up and to the right, it can't be denied. Up and to the right, through the day and night. Up and to the right, molasses in sight. Billions in cash on the balance sheet. We will win even if they cheat. Dilute us more, we don't care. Book value grows with every share. The doubters say it can't be done, but the retail army we've already won. With every share we'll never stop. Investors say we love the stock. Up and to the right, we're in for the ride. It stops on the rise, it can't be denied. Up and to the right, through the day and night. Together we'll soar. Up and to the right. Up and to the right. We're in for the ride. Together we'll soar. Up and to the right.
Surprise!
We're gonna win.
All right, an oldie but goodie there. Hopefully y'all remember that one. Just for fun. And let's see if I can get myself back on the screen here. There we go. How y'all doing tonight? Welcome back to the show. I have a few guests that may be joining in a little bit later, but for now, it's just going to be me and you. So I'm here. This is my time to answer whatever questions you guys have. There's a couple tickers that are hot and heavy in the retail space right now. Some people call them short squeeze stocks. Are they? I don't know, but some of them definitely have had some good run-ups. So maybe we'll talk about those. That would be FNGR and GBUX. GBUX had a 10Q drop today. Highcroft had their 10Q drop this week. I put a video out on that. What else we got? GameStop. I do own GameStop at about 21 bucks. Don't follow my trades. I'm not telling you you're going to be a millionaire, but I do like my entry at $21, and GameStop is following Bitcoin. So let's go Bitcoin. Come on. And AMC, of course, we can't forget about AMC. I'm waiting to see a proxy statement. And if you follow me on X, or you checked out any of my YouTube community tab posts today, I talked about the upcoming AMC debt that is going to be due in the next 12 months, around $250 million. And what do they have left in cash? Around 370 million. We are expecting the box office for the rest of this year to be, according to management, positive free cash flow. Will it be positive 250 so that they can pay off that debt? Easy peasy, no sweat. I don't know. I think we're all just kind of waiting here to see what is the chief financial officer thinking. I know a lot of people blame Adam Aaron, but it's not Adam Aaron's job to do liquidity forecasts. It's not Adam Aaron's job to know the books and know 3, 6, 9, 12, 18 months out what's coming due and how much cash they're expected to have based on expected box office. That is the CFO's job. He's the one driving this. Hey, Adam, we need more shares, or we got to do something. So I don't know. I don't know what Goodman is thinking right now. Is he going to roll the dice and say, let's see how this box office goes? Or is there going to be something on the proxy statement that says, we might not need cash right away and box office is looking good, but we sure like to have something in the back pocket just in case shit. I don't know, but that's kind of what I'm waiting on to hear. One Stop Print Shop, what's up? He says, Cinemark is on fire. Yep. Let's pull up a couple of cinema stocks here. The main ones, you guys know, I love movies. I go to a lot of movies. The only movie theater I've been to since 2020 is AMC, obviously, because I like supporting you guys and an underdog. And I've been invested on and off in AMC since 2021. I don't have any at the moment because I'm waiting on that proxy statement. I do own a little Cinemark. Last year, here on the right-hand side of our screen, IMAX and Marcus Corp are two other excellent movie theater exhibitor companies. Did I buy? I don't know if I did buy IMAX way back here in June at $14.99. It's at $26.98. Solid play, I think. But it is approaching a supply zone. But box office is good, so maybe it blasts through that supply zone. We'll see. And MCS is another ticker that we traded last year. I got in at June at $11.55, and it ran up 100% to $22 before dropping. I unloaded all my movie theater stocks in November, AMC, IMAX, MCS, because week Q1, and they all kind of got knocked down, including IMAX. But IMAX is on the rise. Cinemark, though, you mentioned Cinemark. Let's look at it real quick. I am in Cinemark at $26.60. So I'm up $5 a share on that. I bought down here when it hit this green demand zone, and we're going to try and ride it up to the supply zone and see if it can punch through. If it can punch through a supply zone, then it could go on several more dollars, and that's all going to be box office dependent. Had a good discussion with some folks today based on a post that I made about Cinemark's convertible bonds. We were looking at that on the Bloomberg terminal today. They have convertible bonds that are just about 5 years old, and they are going to mature in August of 2025. Now, if you've been anywhere in the GameStop or AMC community, you might have heard someone tell you the second those two stocks cross the conversion price, boy, those bondholders can't wait to convert and go long and ride with you. No, it's not going to work that way, guys. I don't say that to be a wet blanket. I say that so that you can have proper expectations about what's going to happen. And why do I say that? I want you to look at Cinemark as an example. The strike price, the conversion price on Cinemark's convertible bonds is in the $14 range. It's trading at 31 bucks. Nobody's converted, and we're 3 months away from a 5-year maturity. Why aren't they converting? Because convertible bonds, once they go over the strike price, the bond price moves up just like the stock price. It's like a call option. In fact, if you go read white papers on how convertible bonds work, it's exactly like a call option. And you guys know, if you've bought call options, once you're in the money, you're riding dollar for dollar with the stock with your call option. Convertible bonds work the same way. So there's no incentive for Cinemark bondholders to convert early. No incentive for AMC or GameStop bondholders to convert early. If the price keeps going up, they're going to be happy because their bond price is going to go up just as much. And so they're just along for the ride. I don't think the bondholders are against AMC. They're not against Cinemark. They're not against GameStop. Cinemark has sky high short interest. Why? Why do you think that is? Delta hedging for the convertible bonds. Same thing I've been talking to you guys for months now about GameStop. When you saw that shorting come in when they announced the bonds and the short interest went up, that's not people betting against GameStop. There's almost no shorts in GameStop at this point. In fact, everybody on social media wants you to know how many institutions are buying, right? Isn't it weird? Like they want to trumpet how many institutions are going long, but they still tell you there's a bunch of shorts. Like, make that make sense. Oh, man. There's nobody short in GameStop. There are some shorts, Delta hedging their convertible bonds. That's just, again, go read some white papers on convertible bonds. Go talk to a bond trader. They're going to be short until those bonds mature. And the way that you'll know that I'm correct, I want you to watch the short interest on Cinemark between now and August when those bonds mature. You're going to see it plummet. Because what happens? They get their shares. They're well in the money on Cinemark. They're going to convert. And then they will use those converted shares to close out their short hedging position. Essentially, I mean, there might be some minute by minute, hour by hour, day by day, little bit of tweaks of how they unwind that short because they're trying to always maximize profits. But that's basically how it works. And it's going to work the same way for GameStop. Those shorts will be there until the bitter end, until the maturity, unless the share price gets to 130% of the conversion price. Then the company, be it AMC or GameStop, if the price shoots way up, way above that conversion price into the 130% range, then the company can force a conversion early. Yes, that is a thing. But when I say don't expect early conversion, I'm talking about from the bondholder's perspective. Don't expect early conversion. And if you don't believe me, hear me now, believe me later. Go check what I'm telling you about Cinemark. High short interest, delta hedging. Nobody's converted. I posted the screenshots on that today, and the stock's trading at 2x the conversion price. What happens? Why would a company want to force a conversion? What, Cinemark could, I think they could have forced a conversion. I bet they have that same 130% language in their documents. That's pretty boilerplate convertible bond language. They have been communicating to shareholders that their strategy is to wait till maturity and use some cash that they have on hand to take care of that conversion, plus maybe some shares. Or they're going to use shares, but then they'll use cash, I think, for whatever the difference is, one way or the other. But each company is going to have a different strategy for if they want to convert early. We've seen MicroStrategy, MSTR. We've seen them force some early conversions. That was their strategy. So they could then roll into some new convertible bonds. And maybe GameStop does that if the price soars and stays up there. I can't tell you what a company's strategy is going to be. I'm not in the boardroom. When they get there, we'll find out. But I have no expectations. I have no expectations they will force a conversion. Maybe they will, maybe they won't. I just will be watching right along with you guys. And I'm talking about GameStop here, if we get to that point. Interstellar Ape, what's up? Good evening, amigo. We are back into that interesting time. What are you looking at? AMC Interstellar? It is every day I wake up and I want to kick it, like do something. Drop the damn documents. I mean, if you're invested in AMC or waiting to get back in like I am, do something. And I'm not talking about the stock price. We want to see a damn proxy so we know where we stand. We've been debating a lot of theories. I bet you guys have too. I know some of y'all don't want to talk about it. Some of y'all are doing the ostrich. Oh, no. We can't talk about the D word. That would be fear mongering. Look, if dilution is a D word, but so is due diligence. We love the double D's here. Just saying. If you can't talk about due diligence and risk management, then what are you in the stock market for? It's not fear mongering. It's like keeping it real, folks. Keeping it real. What's going to happen? Anybody's guess. I sure don't know. I don't know. But I think you should be ready for anything. And the worst is going to be the people who think they know what's going to happen and they only plan for that, and then it goes the other way. There's always that group, Remember the Project Popcorn people? They thought for sure that Judge Zern was on their side and crimes had been committed, even though it was a civil lawsuit. The settlement had been agreed to between the two parties, but they were sure that somehow they were going to win. The worst people, that come out of these situations, like the proxy statement coming up, are the ones who think they have it all figured out, but are going to be completely wrong. I like to look at all possibilities, assign probabilities, and then depending on my risk, how much I got at stake, and what the probability of certain outcomes are, I might have different risk mitigation plans. Maybe you're just a roll the dice type person. That's cool with me. Own your choices. You're going to say, no matter what happens, I'm good with it. I don't think there's going to be dilution. I think they're going to just box office is going to be $3 billion this year, and I'm good with that. And if I'm wrong, I'm good with that. If that's how you think, then no hate from me. But what makes me sad, what keeps me up at night, is the people who don't want to consider that maybe their viewpoint could be expanded to consider some other alternative outcomes. And then they get mad when they lose. You didn't lose, you were just incorrect. And you didn't plan for a contingency of being incorrect. I like to plan. If you're in my Discord, there's no topic related to these stocks that we won't discuss very openly, because we want to due diligence the hell out of all potentialities, so that no matter where anybody in the Discord is on the spectrum of what they want to do, they can think about, wow, you guys are thinking about that? I didn't think about that. Well, I don't think that that's a likely outcome, though, so I'm good with what I'm doing. Cool. But be open. Be open to DD. Love the double D's, guys. Interstellar, I have not looked at BBAI. Maybe we can pull that one up. The Vintage Vagabond says if he dilutes at this price, he's crazy. Yeah, that is the problem, right, with AMC. I don't think anybody would be thrilled, including me, about dilution at $2.80, especially if probably AMC is not thrilled about it either. The thing that makes me feel a little bit optimistic is, look, think back to the last 3 years. Why have they been diluting? Because of liquidity, because of negative net income, negative operating cash. If truly the next 9 months are going to be positive, then there's no liquidity concern. There's less reason for the CFO to recommend raising cash right now. I don't know. I mean, what keeps him up at night? Would he like 100 million more in the bank, or is he good? Adam, tell him next 9 months, free cash flow positive. That is the bat signal that there's no more dilution. Or is it a setup? I see other people saying that's just a setup. He's trying to trick you. I don't know, but I think you should be thinking about all possibilities. Make sure you're good with your DD, and then lock in with whatever you think is best for you. Everybody's plan could be a little different. I know back in 2021, I was really hard on anybody that had a different plan. But, I'm a couple years older, and, we haven't been right about a lot of stuff. Being wrong will make you start realizing maybe I should consider alternate outcomes more often. Consider other double D's. Simone, what's up? Does anybody have DJT? I'm trying to think who I know that is trading DJT right now. I have not been, but we can pull it up and look at it here real quick. Did I draw any fancy lines on this chart? I did not. Interesting. This is on the weekly, coming back up to that 50 moving average. 50 still under the 200 on the daily. I have not looked at their financials, but I'm assuming, that not much has changed, that they're probably not generating any income, minimal income, 820,000. Not a lot. Net loss, negative 31 million. Ouch. So yeah, I mean, you're playing a social media sentiment play. There's nothing here on fundamentals to trade DJT. Watch the chart, trade it smart. That's what I would say. There's a lot of tickers like that we're going to talk about tonight. The fundamentals are a dumpster fire, so you got to be intelligent about getting a cheap entry and be willing to hit that cha-ching cash register when you get in the green at a point where you're happy. Vintage Vagabond says, don't they need a shareholder vote at this point to issue more shares to dilute with? Yes, absolutely. Common. To dilute with common, they would need a shareholder vote. I will asterisk my comment. What do I mean? What do you mean? Well, they still have 50 million preferred shares. I don't know that they would do anything with them, and I'm not expecting a repeat of APE, but that is one way they could get around the vote. If they're twiddling their thumbs trying to think, well, holy hell, nobody's going to vote for this shit. Not while we're down here at $2. Preferred is something they could do. Debt is something they could do. No one I've talked to thinks that adding more debt for liquidity is a high probability outcome right now. So they either do nothing, they come to shareholders and talk to you about something with common and a vote, or they do something with preferred. Nothing, vote, or preferred. Those are kind of the three possibilities. And why am I harping on this still? Because over the next 12 months, there's 250 million of debt that AMC has that is maturing. They are going to be thinking about that. It's 2025. That debt is due in the next 17 months, 15, 14, whatever. It's not a small amount. 250 million is the bulk of the cash they have. So I think they're thinking about something. They're praying, like we all are, that the box office blows the doors out. And I sure hope it does. Who is going to see Final Destination this weekend? We got Final Destination this weekend. My wife is super excited to go see that one. Next weekend, we got Mission Impossible. We just rewatched the 2023 or whatever that other one was at home the other night. We are ready to go for next week, and we'll probably go see Lilo and Stitch too. I'm not typically a cartoon guy. My kids are all grown up, but it looks like an entertaining movie, and we do get 4 free movies a week with A-List, so why not? And How to Train Your Dragon. I'll tell you, that's always had a special place in my heart, just from watching that movie with my youngest when he was a kid. Seen it many times, looking forward to the new version coming out. So we talked about DJT. We've talked about AMC a little bit. Dink says, careful. What are we saying careful about, Dink? GameStop. If you just tuned in, I bought GameStop around $21, as you guys know. I don't know why people think I hate GameStop. They just don't want you listening to other people that, have a sane brain. They want you to get their rocket fuel nonsense. Oh, the institutions are loading up and going long, but there's so many shorts, we're going to moon to $1,000. Like this ridiculous nonsense that nobody calls them out on. Talking about institutional buys. They're buying every day, 26, 27, 28. When they're referring to institutional buys that were from filings that closed out on March 31st. Come on. They're acting like these guys are just buying last week. These were filings from the first quarter. They're just now due. They can't even get the basics right. And you guys are listening to them for advice on what GameStop is going to do. $1,000 price targets, ridiculous. If I can get in at 21 and sell anywhere from 30 to 60, that's in my book a good trade. Then I'll wait for it to come back down. However, I will asterisk that by if Bitcoin takes off, GameStop, I think, will follow it. But we need to know, did GameStop buy Bitcoin? Because everybody is assuming that they did. The price is closely mirroring the ups and downs of Bitcoin since what? The beginning of April. You could lay GameStop and Bitcoin chart on top of each other, almost the same damn chart. Like I told you a month and a half ago, expect it to follow Bitcoin. It's not going up because people are rushing in, ahead of the Q2 earnings. It's going up because Bitcoin's going up and people are making an assumption that GameStop and Ryan Cohen bought Bitcoin and that there will be new earnings to talk about. If we find out that they didn't buy any, that I think is going to be like popping the balloon. So I'm crossing my fingers and I'm going to ride it till we find out. I think at $21, my downside risk is pretty minimal. If it were to run up, say, to 30, 35 by next earnings or the annual shareholder meeting, and then we find out GameStop did not buy Bitcoin, I think I'm pretty safe. It's not going to immediately drop to $18. It might get the air let out of it. But like I said, I think about all possibilities. I prefer to always hope for the optimistic one. I hope they bought Bitcoin when it was cheap. And I hope they have some fantastic additional earnings that'll be unrealized gain from the price move up in Bitcoin that will show up on their income statement and bring that valuation. Those darn analysts are going to be forced to increase their price, their fair price for GameStop. What do they have it now at, like $13, basically book value, because GameStop has essentially no annual earnings. You start adding some Bitcoin earnings on top, they will be forced to raise that price. It might only go from 13 to 16, but we need to close this gap. I want to see a fair price valuation close to the current price. I don't like holding something that is 2 times book with no earnings. That is very risky. GameStop is a risky play until we find out what they did with Bitcoin. But I'm here for the ride, and I am well aware of the risk, and I have sized my risk position accordingly. Vintage Vagabond says, I think that Karate Kid, Superman, Ballerina, Mission Impossible, all will be huge hits this summer. Probably some of the kids' movies as well. Lilo and Stitch, I think, is going to be the big surprise. I'm trying not. I have a lot of sites and sources where I look at early box office coming in and early predictions for these movies. I'm not going out on a limb for any of those titles that you have to say that they're definitely going to be a blockbuster. I hope that they do, but I do have my forecast for Q2. What did I say recently, guys, in the Discord? I think I'm somewhere around 2.7, 2.8 billion based on reasonable forecasts for every movie between now and the end of June. Not me creating pie in the sky revenue projections for these movies. I'm talking real industry sourced DD with reasonable expectations. Unless something crazy happens, 2.7, 2.8 seems like a slam dunk. It's still early, and we'll know more at the end of May when we see how the Memorial Day weekend goes. But I am optimistic. And if any of these movies beat my expectations and all the rest perform, then we could easily do more than 2.7, 2.8. So let's talk up some movies. Simone says, thank you for answering my question. I'm new to buying stock. I thought I bought 16 shares of DJT and thank goodness I'm in the green. Yeah, I have traded DJT before, Simone, particularly when it very first came out as DWOC. That was DWOC, right? Back in the day. We made a lot of money those first few days on that super high volatility trading. And I think I've traded it a few times since then. Nothing against it, go Donald. Good luck, DJT. But just being real, if you look at the financials, the company got no income. I'm gonna call it what it is. It's a chart stock, not a buy and hold forever, because they got to show me a lot more revenue, and I don't want to be seeing $30 million losses every quarter with basically no revenue. That eventually that piper will come calling. One day of bad news, you get wiped out. Benjamin, I'm doing swell. How are you? Scarlett is doing good. The only bad thing, I guess, going on, not to be a bummer, but we had a cat that got sick 4 or 6 weeks ago. Our oldest cat, she's about 15, and turns out they did every test imaginable. They finally opened her up and found she had a blockage that couldn't be seen on X-ray or ultrasound. Blockage in her intestine. So they clipped that out, sewed the intestine, the pieces back together, and said, we'll send this off for testing and let y'all know. The testing results came back not good. It was, I don't know, large cell something cancer. They said, you got a few weeks, maybe a few months. It's going to come back all over her body. And tonight is probably her last night with us. She's lost a lot more weight. She's been fine the past 4 or 6 weeks, getting around, going outside, eating, drinking water, having fun. But the last day or so, we're having to force her to eat with a little dropper. And that's kind of where you draw the line, But we were happy to have the last extra month with her. Dink says, no way it's that low. Your movie expenditures alone will make that look like rookie numbers. You're talking about the 2.7, 2.8, man. We will have the biggest ass party you can imagine. If I see a 3 billion box office, I'm not calling for it, but if I see it, we'll be in July by then. I haven't had a drink because I'm on my weight loss, fixing my waistline and my health, just my 2025 fitness goals. I said I'm not going to drink until I can fit in those jeans that are in my closet that I can't fit in. But, you know, if we hit July, 3 billion box office, I will make a special exception. Anya, how you doing? In fact, I've been watching some new YouTubers, new to me, in the fitness and weightlifting and nutrition genre on YouTube. And one that I'm really liking, I think his channel is called Renaissance Periodization. Dr. Mike. Some of y'all might know him, big, burly, bald Russian guy. And he's pretty funny, very sarcastic, but he also knows his shit. And I've been listening in the back of my head where he said, do not diet for more than 4 months. Take a break. Go back to maintenance. Let your body adjust to your new level. Because I've been on a calorie restriction since January 1st. We're going on 5 months now. And I lost a lot of weight. I'm not quite to my target weight or my target body fat. I'm getting close. I need to whittle off a little more, but maybe in June, I just do maintenance for a month and focus on the weights instead of trying to lose. We'll see. Dr. Mike, check him out. Renaissance Periodization. If you're into fitness or hypertrophy, just general good advice. Most of his videos are the same thing. What you eat matters, but mostly the calories you eat matter. Don't eat shit food. Get out and move. Lift some heavy weights. Don't do too much cardio if you want to grow muscle. I have stages planned for my year. My first goal was to drop 15% body fat. That's a lot. So I have to do calorie restriction. I will get to the point where I'm focused more on building muscle back, but we're not there. We're not quite there yet. Christian, how you doing? He says, been doing so much better with my trades this year. Excellent. Been taking your advice to look for stocks with great financials, and it is paying off. Hallelujah. Somebody listened. Thank you, Lord Jesus. Let me tell you guys, can we talk about Finger for a second? Christian, look at this stock. $1.03 back in December. Now at $5.20. Now, if you're in my Discord or you follow me on Twitter, you know, because I posted it on Twitter, my buy order that I bought Finger in December at like $1.23. And I've been very quiet, just, minding my business. I don't need to pump a shitty stock. The pumpers will come back and pump it when the time is right. And they've been really busy for the past month. And they've done a fine job. Thank you. But now that I'm just saying to people, because you know what? I've been through a few squeeze plays. I don't know if y'all know. I am the number 2 rated short squeeze specialist. I've been through a few of these. And you know what's going to happen? There's going to be people buying at $5.20. And then I'm just theoretical, right? It's going to come crashing down. And the pumpers out there on YouTube and social media are saying, no one saw this coming. Ham told us it was going to 1,000. I just don't get it. Those darn criminals. No, look at the fucking chart. It's going to, it's no stock goes from $1 to $5 on no fundamentals, especially when the CEO is being very clear with you that he needs to raise more cash. And Martin Shin at Finger Motion has been very clear that he needs to raise more cash. I'm not saying anything negative about Finger other than sharing reasonable DD, because people like Christian are tired of losing money. When you are in a profit, take some freaking money off the table and quit trying to buy the top every day. Enjoy your gains. If you think it's going to $9 or $1,000, leave a little on the table, but good Lord help you. If you haven't taken any profit, you've not even covered your initial nut, and you're still buying. I mean, that's a strategy. It's kind of a kooky one, and I hope it works out for you. But good Lord, man, this is a massive, beautiful run-up textbook. But there will be a day when the piper comes calling in this stock. And that day may have been yesterday with this big red candle. You guys know we talk about the needle of death on this channel. Shout out to my long lost friend, Super Steven. I think he's the one that gave me that word or coined that word. It's that moment in every short squeeze where you see where the shorts got squoze. It looks like a big bloop, big needle. And then once they've all covered, there's no more buying pressure, and it just, and then once it starts tanking, the shorts really come in and start punishing it. What would really be horrible for Finger investors is if the company announced another dilution. That would just obliterate it. Oh, hey, you want to hear something funny? This company raised money in December selling shares at $1.50. And I had been saying for a year that was coming in Finger. All these months, I've traded Finger a bunch, you guys. Anybody who says I don't follow or like Finger, F you, because you don't know what you're talking about. We've traded Finger a lot. We like cyclical stocks with a lot of social media attention. They're fantastic swing trades. But I had been saying for a while that there was more dilution coming, not because I'm being negative, because the CEO is telling us and every filing is telling us. That dilution finally came. I did not have a position. It tanked, and then I bought in. And if they announce another one, whether this goes $4, $5, $6, $7, $10, I don't know. I don't know where it's going to go. Depends on how long they can keep you guys buying it. Y'all are the reason that it's going up, not shorts. There's almost no short interest in this stock. It is hard to borrow. It has a high cost to borrow. Brokers are very concerned about your risk that you're taking off. They're disabling people from buying it because they see the risk here. But it could still get pushed up, and that's fine with me if it does. I'm not short on the stock, and I want to see you guys make money, but I want to see you take it home too. So here's what was said today on Finger. Keeping in mind that the company, they'll blame it on the sales agent. Oh, that sales agent sold the deal for $1.50. No, the company told them at what price they'd be willing to part with shares. The company sold shares. The company diluted at $1.50. That's why the price tanked in December. Nothing substantial has changed in this company's fundamentals or financials since December. But here's what I'm going to call them promoters. I'm going to be nice. Here's what they're running with today. I heard a rumor that Alibaba's buying a 10% stake in Finger Motion, and they're going to pay $7 to $10 a share. Get in quick, guys. Get in before those Friday options expire, because we need to sell you some options. Oh, I know that's what they're thinking. They got some options they want to sell you, but they sure are hot and heavy to get you guys to pay up to $7 to $10. Get in now. Time's running out. Alibaba news on Monday. Come on. You think Alibaba's stupid? They just sold shares for $1.50 a couple months ago. Now you're going to tell me that Alibaba's willing to pay not only 8 times that, but 100% premium on the current price. There is zero world of reality that makes sense or is truthful. And what do these promoters do? I got a lot of P words I'd like to use on these guys, but I'm going to be nice tonight. Call them promoters. They say, everybody on the street knows it. Rumors are out there. Better get in now. Use your head, people, and understand when you're being lied to. Alibaba is not going to pay $10 a share for a stock that was just sold for $1.50 a few months ago. That is a lie. That is a pump to get you to buy in at the top here. Hopefully it's not the top. Some of y'all are going to still keep buying. You don't want to hear a reasonable DD. Remember, I'm the guy that waited to buy in at $1.30 on Finger. I don't hate Finger. I want to see you get a cheap entry and then get a good profit and an exit. I don't want to see you for the next 3 years like the poor MMTLP and BBVY people bag holding something that is very predictable what is going to happen here. Just saying. What I can't predict is how high could it go, but it's not going to $100 or $300 or $1,000. That's nonsense. FOMO could, it's a hard to borrow stock. FOMO could push the price up. So good luck. I hope it does. I am not short. And I want to see you make whatever dream you have. I would like to see it happen. But even more than that, I want to see you exit the play in the green and not be crying for the next year. I wish someone would have told us that they were likely to dilute. The company told you in every filing, in an interview the CEO did 2 weeks ago on YouTube. They've been saying it over and over. When does that happen? I don't know. Hopefully not soon. But I'll tell you what, the higher it goes, if you've been in meme stocks for a while, you know companies that need to raise money, when are they most likely to do it? AMC, GameStop, into run-ups. That's why they pay people to promote the stock. And yes, these people on social media covering Finger are 100% being paid. It is disclosed in company documents. That information has been made public if you care to go verify it. I have no problem with that. I don't even think they deny it. But you need to understand the motivations of the people you're getting information from. Spring Herbs, thank you for becoming a member of the channel. Welcome to the club. Spencer wants to look at Wilds, and Tim wants to look at AMD. Do you guys remember us talking about, or was it, oh, I think it was Intel was the one we were looking at. Let's look at Intel versus AMD. How about Intel way back here at $20? Intel is kind of like my if NVIDIA hits the fan not in a good way, backup plan. AMD is another great alternative. I see my buys here, but I don't own AMD anymore. Where's my sell? I need to update my chart. But yeah, beautiful price down here at 76, dropped all the way below the lowest retracement. Beautiful entry. And let's see. I mean, I need to look at the financials, but the next real supply zone is all the way up here at 172. What are analysts saying? Let's say companies like AMD, we like those for like a 2 to 5 year hold. These are, I don't make videos about these stocks every day because they're boring for most people. We're buying them and holding them for a couple years. There's no need to make a video every day on it. But let's just see what analysts, they have an average price target of 136, a high of 210. And is that a old price? Yeah, most of the May updates on AMD are between 120 and 150 for a 12-month price target. And that is based on what? Always what we're looking at, and this goes for any stock. I don't care if it's GameStop. I don't care if it's AMC. I don't care if it's AMD. What I want you to do when you're trying to figure out what is a reasonable price, this is how every professional analyst is doing it, and why you guys don't like their numbers, because a lot of the stocks we trade have no earnings. And so the analysts give a shit target because there's no earnings. But when you have a company with positive earnings, it becomes much easier. You can just look at that earnings per share annually: 455, 604, 715, 998. You can use a industry PE ratio. Right now it's around 25 for AMD. I would imagine that, based on the S&P, that's a reasonable PE ratio. You can see it drops off as we go out, but that's just because they're not. What I would do is hold this PE ratio constant and multiply it times this price, these earnings. Then you get your price target for 2028, because the analysts are only giving you a 12-month price target. And you could do the same thing for GameStop. I mean, the reason that GameStop is in the tank on how the analysts are valuing it is not because GameStop sucks. It's not because they have a bunch of cash. It's irrelevant that they have a bunch of cash. The only thing the analysts care about is what are the earnings. And I know some of y'all say, well, the analysts suck. Okay, but they're the ones driving the price. And it's not just the analysts, it's the institutions. Forecast earnings, 33 cents. And if we say a reasonable PE ratio of 20, that's what, $6? Well, that ain't going to work. I mean, they got more than that on book value. Book values, let's just say $13. I don't remember what it is in that range. So they're going to value the stock at book value, because you can't value GameStop on earnings or any earnings forecast. It's going to come in at $6, $8 valuation, $10 based on earnings. This is why Ryan Cohen hopefully is buying Bitcoin cheap and rides Bitcoin up, because that will throw additional earnings onto this table. Earnings from the gain of Bitcoin. Then you get to bump up your price target because the EPS is moving up. And this is the uncomfortable thing that nobody that covers GameStop will tell you. The reason that the price target is so low is because there is no earnings. It's not just enough to beat your chest and say, we're profitable. So what? 33 cents. That is meaningless. That gets you a $6 price target, bros. $6 billion in cash gets you 0, because I can go put cash in treasuries and get 4.5%, 5%. Why do I need GameStop to risk my money? But you tell me you invest it in Bitcoin and you're going to double your money over the next 2 years. Now we're cooking with Crisco, ladies and gentlemen. Now we're putting some serious earnings contribution onto the income statement. It becomes a whole new ball game for GameStop. That is what I would love to see. But anyone who's wondering why it's having trouble moving, because there's no earnings. And the only bet on GameStop right now is, what did they do with Bitcoin? What are they going to do next with Bitcoin? Or will they have some strategic alliance, partnership, acquisition, anything to bump EPS? As far as I'm concerned, they could spend all of that cash on the balance sheet. If it's invested, it's not going to change the valuation. Cash sitting on the balance sheet is not helping GameStop. No one's giving them credit except some kind of goofy YouTubers who don't know how to value a stock. Cash on the balance sheet is meaningless. Earnings matters. Yes, you want a balanced balance sheet, right? You want to have more assets than liabilities. That's a good thing. But there's liquidity, there is solvency, and then there's what everybody really cares about, profitability. GameStop does not have that. Liquidity and solvency are meaningless in terms of driving the price to somewhere you want it to go. So let's go Bitcoin. Anyways, I got off topic, but I want we started off talking about AMD's earnings over the next several years. You could do this with GameStop. You can multiply the earnings. These are just store earnings. Bitcoin earnings are not baked in yet because we don't even know if they bought it. As soon as we know, you'll start seeing these numbers change, and you'll see the analyst price target change. I promise you. I have zero doubt. Until they get more earnings on the table, you're not going to see Michael Pachter raise his price other than in lockstep with book value. He's been raising it because they keep putting cash on the balance sheet, increasing the book value. He's only valuing it at book value because book value is worth more than earnings times a PE ratio. It's kind of crazy. Crazy how that works. JP, I talked to Mediocre yesterday. He had a full day of work scheduled today, and he said, "Tony, I know I've been super busy, and I want to do a live stream with you on Thursday, and I'll be ready to go at 7:00. And nope. We'll try again. We'll try again and get him tomorrow or Friday. No, tomorrow is Friday. Tomorrow or this weekend. He's around. I still talk to him all the time. I betcha that he had an early start for his work, and he probably was out working all day, got home and decided, I'm too tired to stand up or stay up late. So I'm drinking water, by the way. Cheers. All right. I see somebody mentioned hymns. Let's pull up him. Oh, box office. Where are we at? 1.18. 1.18. There, I see people saying it's going to be 2 billion in the next 15 days. Man, I would love to see that. I don't know about that. Go see some movies. Hymns and hers. Woo! Look at that. From $5 to $72.98. Wow. PE ratio, trailing 12 months, 85, forward 90. That's a little pricey. Let's see then, why might that be? Are analysts predicting more earnings growth for HIMS? See, I know a lot of people want to, if you watch some other YouTubers, the first thing they want to do is go, look at this balance sheet. They got no cash and the book value. You don't need to do all that. Nobody cares. Go to the forecast and look at the earnings. That's all you need to do. Earnings per share. It's really that simple. You guys realize how much time you waste listening to people talking to you about book value and balance sheets? The stupidest shit. Earnings per share forecast for HIMS, 68 cents, doubling by 2027, dropping the PE to 45. PE doesn't get down in the 20s till 2028. I'm going to say that seems pretty risky to me. I mean, when a stock gets bid up to, before we look at income and balance sheet and all that other stuff, we got to start here. This is the expected revenue growth, 2.3 going to 4.2 billion. Earnings going to double from 63 cents, quadruple from 63 cents to 241. So the price of $68 might be reasonable if you're looking at 2028 earnings per share. It seems to me a little bit high for right now, based on expected 63-cent earnings. It's crazy. So, I'd be using that in my analysis of how long do I want to ride this thing? I mean, when things become really popular, they can go a long way, right? They can go, look at Palantir. They can surprise us all when big money gets behind them. So if you think that is likely to happen, do a Anya and leave a little bit of money on the table. Anya is really good at that. I'm the first guy to pull all my money out. I'm in the green, baby. Anya, Discord, I'm in the green. I'm good. I'm looking for the next one. Anya's like, what? You sold? A month later, she's like, Tony, I got a better exit than you did. Sometimes that happens. Sometimes they keep going. Revenue, beautiful. I want you guys looking for companies like this. Revenue going up every quarter, every year. We all gamble in shitty stocks that have no revenue or blah, 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 But these are your bedrock stocks. Find them early, get a good entry, and then just sit back, smoke a cigar, and wait a year or two. When a company's growing like that, generally a good sign. Net income flipped from negative to positive, and it is on a solid uptrend. Beautiful. Shares outstanding. Wow, they had a huge dilution between 2020 and 2021, but it has slowed down. I'm guessing it's probably executive compensation or something. I don't know. Free cash flow, positive, beautiful. Gross margin, 77%. 6% operating margin, 9% profit. Now, I mean, no, I'm not going to be mean to GameStop. Let's not go ask anybody to look at GameStop's profit margins. And I'm not talking gross. How's that take-home pay look? That's what we want to know. Balance sheet, $273 million. Short-term investments, 48. All right, only a couple things to look at here. If you're not a CPA, there are only two things you care, maybe three things you care about. What's the trend of cash? All right, it's going up. That's good. Total assets versus total liabilities. 890 million versus 342. Beautiful. The balance sheet is in order. You got more assets than liabilities. You know how many we look at where they're upside down balance sheet? That is a red flag that you should think very seriously about managing your position size very carefully because it's a risky play when the liabilities are higher than the assets. So that passes the first red, yellow, green flag. And then the other thing we look at is total current assets versus current liabilities. That is your working capital. And that is beautiful too. You can also find that down here. Working capital, 166 million. That is just total current assets minus total current liabilities. You want to see a company with a positive number down here. That's when you know you have relative safety. Doesn't mean that the price on the chart right now is a good entry, but we're just talking about the relative safety of this company. It looks pretty good. Balance sheet is in order. Another thing you can peek is if they have any goodwill. This company has 117 million of goodwill. That's not crazy for their total assets, 900 million. It's fine. Cash flow, operating cash flow, positive operating cash flow. There's a lot to like here. The only thing then that you need to do is, what do you think that the analyst and company expectations that they're going to be able to grow their revenues are correct? And at what point are you willing to plunk some money down? Like I would be that guy that says I need to pull back somewhere back, close to this 50 moving average. And I might sit out of this stock for a year and I might miss a run up to $99. And that's okay with me. I don't like buying a 90 PE ratio stock. Even though the fundamentals and financials are beautiful on it, it seems a little pricey to me. That doesn't mean it's topped out here. But I'm talking about how I like to buy. I don't like to buy when it's running up. I would have been happy to buy here. Anya, wasn't Hims the one that had a generic Ozempic also? Am I correct? Didn't Ozempic become short on supply and Hims had a formulary or whatever you call it, where they had a generic version? Is that how they got all their money? Is that how they turned this ship around? I got like a couple things bouncing around in the back of my head. And I'm thinking that's the story. Yeah. It's a gold mine. Generic Ozempic. It's a gold mine on you. And then when I'm sure that this red candle set was probably news that they were going to lose that exclusivity. And that's why it came down. But I haven't been keeping up with it since that news came out so many months ago. Oh, Viagra too. All right, Anya. Sparky, what's up? He says, you look like you're wasting away. Hey, Sparky, you want to come on and talk about bonds? I'll shoot you over an invite. Just comb your hair. Clean up the beer bottles behind you in the background. Scarlett's dad the other day, we went to a birthday party. I am skinnier and I don't have a ton of muscle mass. It's mostly in my back and shoulders because I'm working on pull-ups and a muscle up. I've been doing a lot of cardio, so I'm on calorie restrictions. So don't expect me to look muscular in the first half of this year, unless I get really shredded on body fat. Then the few tiny muscles I have will at least they'll look okay. We'll get to the muscle building the second half of this year, assuming I don't injure myself again. Scarlett's dad, we were at a birthday party for our niece. He said, "Tony, you're too skinny. You need to put on some weight." Come on, man. I've been working hard for 5 months to get rid of 3 inches on my waist, 4 inches ideally. Don't tell me I'm too skinny, because we're not done yet. But I don't have Sparky, I don't have a weight goal that I'm like, oh, I must weigh 170, 175. If I weighed 200 and had 15% body fat at my age, that I'd be okay with that. But I'm going to probably settle in somewhere around 175 by the time I cut all the fat, and then I'm going to have to just do a lean bulk. I don't like the dirty bulk nonsense, and I don't need to at my age anyways. I don't need to look like a bodybuilder. Just need to maintain some flexibility and mobility and muscle mass. Sparky says, I haven't been 200 since 7th grade. I weighed about 2 or 3 years ago. You guys might have seen the pictures. The trolls like to throw my topless pictures out there. Yeah, they found my OnlyFans. No, it was public photo. A couple 2-3 years ago, I was around 180 probably, and about 13-14% body fat. I would like to get back to there without injuring myself, which is what led us to this current state of decline that I'm in. First, hurting my knee, my PCL, not my ACL, and then the next year hurting my back doing squats. I'm going to be much more intelligent about it this year, which is why I'm not in the gym doing tons of weight. Send me the link, Sparky says. All right, let me send you the link. I'm being very cautious about working on mobility and flexibility. And you'll even be happy to know that I started doing some yoga stretching. My wife is so happy. Let's see, how can we add somebody here? Invite. Sparky, I'm going to send it to you on LinkedIn. Michael says, Tony, what is 5858? Oh, HIMS. HIMS. Anya says, you're such a good hubby. Anya, I'm not doing yoga now. And I've only done one session with my wife, and it wasn't even yoga. It was a sound bath. Basically, you just lay there for an hour and they play music and drums and gongs and all sorts of weird shit. But she loves the sound bath for relaxation. And, meditation and relaxation is good. But the reason I started doing some at home, in fact, my yoga mat right down here on the floor behind me, Anya, with some kettlebells and dumbbells. And stretching ropes and straps and stuff. I'm doing, before I go out running or biking or whatever I have planned for that day, I'm doing a lot of mobility and flexibility work because, good Lord, you guys know when you get old, it becomes, if you don't take care of it, you lose it. Like just bending over to tie your shoelaces from the waist. Can you do that? If you're 20 or 30, you're probably saying, of course I can. Wait till you get close to 60 or 70. It's not so easy anymore. So you got to take care of it. And I think some of my lack of flexibility and mobility, because I have not been taking care of myself at the end of last year, that has been leading me to get these calf strains when I'm out jogging. Six Son, what's up? Yeah, so I had my right calf strained twice in the last 30 days. I rehabbed it, fine, working great. Went out on a interval run. It was going to be 3 intervals of 10 minutes. I'm getting ready for 5K. And I did the first 10 minutes just fine, beautiful, on pace. Walk for 3 minutes to end the interval. Start the second 10 minutes. And the freaking other leg, the left calf. Oh. The first 2 calf strains I had last month were so bad I had to call an Uber. I couldn't even walk. At least the left one, when I heard it 3 or 4 days ago, I was able to walk the 1.5 miles back home. And I do the whole ice and elevate, and now I'm back in stretching and flexibility. But the fact that my left one, I've been a soccer player, track, all that my entire life. I've never, ever had a calf problem. The more I looked into it, you know, your body's a machine, and if something on the machine is a little conky, like your hip flexibility or your hamstrings too tight, the machine compensates with something else, like a calf. I'm thinking, as bad as my flexibility is right now, and I'm working really, really hard on it right now. That's why I started yoga, Anya. I think that my hip and hamstring flexibility is overstraining. They're making my calves work too hard to compensate. So, long story short, I'll probably push my 5K out a month or 2 because I don't want to be hurt. I mean, I'm not in any pain right now. I feel good. I can't go jump rope or do anything stupid. I could go on a walk or a hike. My left calf is almost back, and I've got to do some strength training on it now that it's pain-free again. All right. Michael says, look at KR or what's that other one? ACI. Both could go up after today's bottom. All right. YOLO. Oh no. Amputation is cheaper. Come on, yo. What am I going to do when there's a little dinaro later this year? Dan, run around on my peg leg, chasing them on the playground. KR. Let's take a look. Kroger. Kroger. Kroger is a grocery store chain, I think, in the southern United States. I don't think we have any in Texas, but I have lived in states that have Kroger. Used to shop there all the time. I'm really surprised to see a chart like this on a grocery store stock. What am I looking at here? What the heck? How's this even possible? Who gave me this one? Michael. PE's only 14. God dang, man. If you had bought Kroger back in 1995 at $1.83 and held it $73. And what are our price targets? Again, we want to look at earnings expectations. Analysts are going, you can just go to a tool like this. You don't need to go listen to an earnings call or troll social media. The analysts are going to listen to what management says, use that to create a earnings forecast, which will then derive a price target. That those expected earnings are down here. You can do this for any stock, and you should. Wait, Sparky, did you get my invite? I guess he's combing his hair. Their earnings are expected to go up over the next 5 years from $3.67 to $6, so up about 80%. Price targets 70s to 82 on the high side. Average forecast of $69 is a 2% increase in the stock price over the next year. I'm sure that if I looked at the financials, this is a fine company. I would bet that the profit margins are slim. Gross margin 23, operating margin 3, profit margin 1.8. But, and that is true, that profit margins are slim. However, what is the free cash flow? $1.7 billion a year. Can't beat that, guys. I don't need to look and see what their book value is. I don't need to see how much cash they have on the balance sheet. They're throwing off a metric ton of cash. And they have positive earnings. They have revenue that's growing. It's kind of slowing down though. I don't think I've ever bought a grocery store stock. I bought Walmart. I've bought Costco. The big titans. It's hard for me to get super excited about Kroger, but there's not a lot wrong with it either. I mean, you tuck a couple shares away and come back in 5 or 10 years, you're probably going to be okay with minimal risk. YOLO. No, there is no baby news yet. I'll say that. But Scarlett, she's bugging me. I don't know if she's watching us tonight. She's in the other room. She said, "This is going to be the year. You made me wait long enough, Tony DeNaro." I said, "Let me see if I can get back in shape without straining my calves." All right, what other tickers? One other fun one to talk about. We talked about Finger. I read the riot act on the promoters of that stock. Although, like I said, I bought it at $1.30, and I have nothing against Finger. I have a problem with people giving ridiculous price targets, and then they're going to create bag holders. So that's the problem I have. Let's look at the other one that these guys are promoting. Same promoters of GTII. That one worked out so well. MMTLP. Oh boy, that one went good. Same promoters. Now we're talking Finger and GBUX. GBUX. Penny stock. This company had 200,000 in revenue. It's a 325 million valuation. Now, explain that to me. Explain that to me. I know no one's buying GBUX, Tony, because of the valuation or the fundamentals. It's a squeeze play. All right. Should we go look at the short interest? No, don't look at the short interest. You gotta look at the fake short interest that's in a tweet, because all the data is not going to tell you what you want, Tony. The short interest is going to show that it's only like 2%. And we don't want you to see that. We want you to remember that it's the naked shorts, the ones you can't see, the fake ones. That's why you should pay $350 million market cap for a company that's making a couple $100,000 a year in revenue, a quarter in revenue. Company that's got $20,000 on their balance sheet. $20,000 on their balance sheet. $325 million valuation. Crazy. Total assets, $20,000. Total liabilities, $3 million. Probably no problem there, right? We got no cash. We got $3 million in debt. Most of it is in default. If you read the 10Q, it's not a problem. Pile in, guys. They can't wait to tell you over on those other YouTube channels why you should pile into this stock. Good Lord. I mean, God bless if you make money on this one. It has had a good run. But don't be caught being a bag holder in this shit, because these people pumping it are not going to talk to you about the financials. And look, the company just issued 24 days ago, they promised a special dividend. Have you heard that before? Special dividend coming your way. Hey, Mr. Promoter, what do we need to say to get a bunch of dumb retail traders to overpay for this stock? Tell them you're going to issue a special dividend. It works every time. Worked for GTII. GNS tried it. Finger is talking about a dividend. GBUX, do a dividend. Same guy counseling all these companies. The special dividend is what for GBUX? Oh, it's warrants so that you can buy more shares. Wow, what a gift. How'd you like that? A special dividend so that they can make more money off of you. At $4 per share. Anyways, there was a lot of confusion about what the date of record is for the GBUX dividend. It said in their press release that, and I don't see it in this press release, but I have another one up on another screen here. It said the date of record was April 19th. I tweeted them this afternoon, their press release. The April 21st was the date of record, sorry. Date of record was the day they issued the press release. They were telling people on YouTube today that the date of record is today and you better buy it today. No. Today is the ex-dividend date. That's the day that the stock price starts trading with the dividend or with the warrant taken out. And typically, we would expect that the share price would be knocked down a little bit by the value of that special dividend or the value of the warrant. Unfortunately, as the company promises here that you'll be able to read more about all the details in a warrant agreement, which will be available on the company's website and regulatory filings, it's been a month and we haven't seen jack shit. I don't own this stock. I'm keeping an eye on it because a lot of people are being misled into this stock. It's been a month that the company said they were going to publish a warrant agreement so that you could know what you're getting. The ex-dividend date is now passed. The date of record passed. You're going to get something on May 21st. Cool. That's going to allow you to buy more GBUX at $4 a share. I mean, if that gets you excited, more power to you. There's nothing special about this dividend. It's another way for the company to generate cash liquidity for itself by you exercising your warrants. Or maybe they're just giving it to you and you get free more shares. Maybe you just get more free shares. I can't even tell you. You know why? Because we haven't seen a warrant agreement they promised 3-4 weeks ago. Let's just say you got them free and you can exercise at any time over $4. Okay, you got a freebie that is going to, if everybody exercises, dilute everybody's ownership. Oh, well. Crazy stuff. What is GBUX? Michael, it is a OTC penny stock, i.e., not something we typically talk about. The only reason I'm talking about it is we have promoters pushing this penny stock that has $20,000 on their balance sheet in cash and $200,000 in revenue and $350 million valuation. They are telling people it's going to $100, $500, $1,000, just blatantly lying to people and telling them it's all because there's hundreds of millions of naked shorts. I have no evidence to give you. Just trust me. Everybody knows it. No one learned in GTII. No one learned in MMTLP. No one learned in, what are the other ones we've talked about? GNS, BBIG, all these BBBY, all these same type of plays that I warn you guys about. When the getting's good, you got a lot of profit in here. Take some off the table, but there's going to be bag holders because they're more greedy than common sense. They hear someone say $1,000, and even though it makes no logical sense, we don't want to hear about the financials, Tony. We want to hear about those magic beans, the naked shorts. What do I think about Franzia stock? I don't know. Is that a boxed wine? I'm not a big boxed wine drinker. I don't see a ticker for it. DJT we talked about earlier. I have no problem with anyone that wants to trade DJT. I would say the financials are a wreck, so trade it on the chart. Hopefully you're good at reading technical analysis and identifying good entry points and exit points. It's not a stock that I would hold. It's a stock that I would swing trade until they have real meaningful earnings and they're not losing 30 million a quarter. It's not a great long-term hold. All right, Michael says, look at PED. Yeah, I haven't been to a Best Buy in a long time. Country computers. So I don't know if the last time I went into Best Buy was about a year or two ago, and I got these upper monitors. PED, Pedevco. What are they? Houston, Texas, oil and gas company. Oh boy, is this another MMTLP? Properties are located in the San Andres Formation of the Permian Basin. All right. Let's not prejudge it. It's dropped from $54,600 to 68 cents, but let's not prejudge it. I'm sure there's some value here, right? Let's see what we can find out. Analysts have price targets between $1.50, $1.80, $2.25. Let's see how old those are. They are fairly $1.50 recent, which is good. These are the only two I'd pay attention to. Forget all this noise. $2.25, you can throw that out. That's a year old. $1.50. We got one analyst covering this stock. He's got a track record 1 star out of 5. Not really good for Mr. Jesse. And I would, on these companies, look up D. Boral Capital and see if they are a company that has ever pushed share offerings for this company, because sometimes they will give kind of pumpy price targets to set up a new offering. Kind of like what I call the in-house analyst. Let's see what the financials look like, though. Let's just go with Jesse's $1.50 price target. Revenue, $39 million. It's going up. Gross profit going up. Operating income under $5 million, but at least it's not negative. Net income. All right, that is a huge number. What happened? See, now I would need to go read a 10K now. Something weird. Go to quarterly. I would want to understand why there was this big jump. Earnings from continuing operations. I'm not a CPA, so I got to do it the old-fashioned way. Go read the management notes in the 10K. And we're not going to do that tonight, but that's what I would do if I was you. Make sure you understand why that net income went up so much. Cash dwindling. Current assets. I got growing receivables. $13 million in current assets. 6.9 in current liabilities. That's all right. The balance sheet is okay. It's not horrible. So yeah, I would want to dig into what happened in that last quarter. You got a Permian Basin update 2 months ago and a 2024 financial results. Read those, see what you think. Especially read the 10K, every line of it. Press releases often only tell you the good stuff. The 10K will also tell you all the bad stuff. Country Computers, what's going on with Finger? He says it is being pumped and it's been a beautiful play. I bought in it. If you check my Twitter or if you're in the Discord, you already know this. I bought in December very quietly, although I posted my buy and then said, don't follow me. I bought in December at $1.23 because I knew, this dilution was predictable. Once it was announced and the price got tanked, that's when I bought in. Now we've had a run from $1 to $5. It's a beautiful play. The bad thing is the promoters of this stock on YouTube and Twitter are telling people that it's going to $1,000, and they're lying to them. They're lying to people. I busted one guy with a fake analyst report with a $10 to $22 price target. I asked him, hey buddy, I mean, the guy was assuming he was telling the truth. I asked him, can you shoot me over the source link to that analyst? Because I can't find the company. And he blocked me. What does that tell you when someone does that? You ask for DD, so we're all supposed to do our own DD, right? You ask for a source and they block you. Somebody's lying there. Somebody doesn't want to get exposed for publishing a fake article. Now they're telling people that even though the company just issued shares valuing their shares at $1.50 a couple months ago, they're telling people today that Alibaba is going to buy in Finger at $10 and take a 10% ownership. Like, that makes 0 sense. The company literally just sold shares for $1.50 a couple months ago. Nothing has changed at the company. Alibaba is not coming in to buy 10% of Finger for $10 a share. That is fucking smoking crack. Be happy with your 500% run up and, lock a little gains in. If you want to let a little ride, let it ride. Maybe it goes up 6, 7, 8, 9. I don't know. It's gotten there before. This is really when we started watching Finger, when it ran up. I've been watching Finger for years, trading it here and there. It ran from 62 cents to $9. I mean, for me, that was like, hello, put this on your everyday watch list. Look for good entries. I've traded this stock a lot. Long every time. I do not short stocks. It's been a fabulous swing trade, but I don't listen to the goofballs giving $1,000 price targets. They need you to keep buying at $5. That's why they do that. They're being paid. Some of them don't even own the stock. And they'll tell you they're getting paid to talk about the stock. They won't say who. And I have no problem with anyone getting paid as long as they disclose it. But there's no chance this thing goes to $300,000-$500,000. You can forget about it. I want to see you guys end your week or your month happy with money in your account and your cash safely tucked away, ready for the next dip, because it will be coming. I don't know when, a week, a month, a year. It's coming. Anya says, why isn't the media covering Aspen? I think, I was kind of wanting to hold off the Aspen aerogel discussion for a night when Mediocre was here. He and I have been talking about it almost every day, Anya. And I've done a lot of work on Aspen. Mediocre has done even more than I have, DD, because look at this beautiful dip. It went all the way down to 424. And then immediately we were like, this company is not a train wreck, ASPN. They make a thermal film for EV batteries, the cells. And GM is their largest customer. They're not a horrible company, but they did have some bad news with this administration taking the focus off of EVs that kind of rug pulled the whole industry. If you own any EV stocks, you know what I mean. And Aspen Aerogel had to shut down a planned second factory that they were building in Georgia, I think. Took a $300 million hit this quarter for costs associated with letting that plant go. They'll get some of that money back when they sell some of the equipment and stuff, but I mean, that's why it crashed. First, we had the big crash back in February, but then we had another little mini crash. I don't think, Anya, none of us think that Aspen is a shitty company. But it's going to be a flat. Here's what I told Mediocre. This play, unless something happens where EVs start picking up, this is going to be a flat play for the rest of this year. That's my, I don't think, the management is making good decisions. They're wringing out cost in their operation to get to a point by the end of this year where they're at break even based on their forecasted revenue. They're doing the right things, but the environment that we're in with the administration is not doing them any favors. So it's going to be a slog and a play of patience until there's some resurgence in EVs. Yeah, let's look at UNH. That'd be a good one to wrap up with. Sparky's going to miss the whole live stream. Hurry up, Sparky. I know you want to say a few things. Holy. $600 down to 248. Did anybody buy at 248? God damn. You thought AMC was having a bad day. DOJ probe. Yep, that'll do it. This is like that Hawaii Electric play. If you're the most degenerate of gamblers, you look for an opportunity like this. Maybe buy a couple shares. It's not really not my kind of thing. I don't want to be, I don't want to be taking a chance on a DOJ probe. And if I miss it and it runs all the way back up to $600, not a big deal. We can find 100% gainers without a DOJ probe on them. Sparky, check your LinkedIn messages. Can you do that? If I need to email it to you, I can. Blazon's in the house. What's up, amigo? Dan says he's looking at BYD. Boyd Gaming. Have we talked about this one, Dan? Or did you mean Beyond? You're looking at Beyond, aren't you? All right. He says email him. Hang on, guys. Let me pull up my email. Whoop. All right, Sparky, try that. You should have, you've got mail. Should have an email. Oh, the Chinese EV company, YOLO Ono. You mean the one that's actually making money? All these EV companies, and no one's talking about the one Chinese one that's actually making a profit. They all want to buy the Lucids and the Mullins and the Rivians and everyone that, what's that other Chinese one? They want to buy all Neo. They want to buy all the money losing ones, but no one wants to look at the Chinese EV company that's making money. BYDDY. I have my list here of all the EV companies. And this is the one you're talking about, right, Dan? BYDDY. People want to go throw their money in a furnace and Mullen is going to be the next thing. You got profitable freaking EV companies and you're not looking at them. You're throwing money in a dilution machine with a CEO who is, oh man, that once they're done with what's that guy, John Berta, they're going to go after Dave Mishery. Almost called him Dave Mullen. Sparky, I see you in the back room, but it looks like your camera's not on. I'm going to put you in the back room until I see your camera there. Six Sun says, why is AMC moving up? I was waiting for you to ask that. I was waiting for anybody to ask that. Because the two most common questions right now are, why isn't AMC moving? Followed by, why is it moving up finally? I'm just going to give you kind of our group consensus opinion. It's not moving because, all right, Sparky, I see you now. You ready? Wave your hand if you're ready. All right. What's up, amigo? Now we can't hear you. Check your mic. Well, I can't hear you anyways. We think that AMC is stuck because of the big money and a lot of investors like myself and everyone I talk to waiting to see what's going to be on the proxy. And the reason that it is generally moving up is Goldman Sachs is done selling shares. We think that forward contract, I think that they've exhausted all the selling that they were going to do. And so now you don't have that extra selling pressure that was driving it down. And it's just a battle between shorts and longs right now of who has the more balls ahead of the proxy statement. Box office is going to be good for Q2, but that might not be even important if the company has some surprise dilution announcement. I don't know what they are going to say. Maybe it's nothing.
Hey, Tony.
Now we hear you.
All right. So I apologize. Hello.
How you doing, my friend?
Yeah, very good. I wish I was skinny like you. I'm one of those proud 6'5", 275 guys. So
is it possible in any way for you to bring the mic closer to your mouth?
I can. I'm trying to see which one is affecting my setup here. Hang on a second.
Kevin says, is it common for most of the volume going off the exchange? Guys, yes. Almost every stock you look at has over 50% of the volume going off exchange. I see people posting that. When is this crime going to end? 55% off exchange? You could give me 10 tickers right now that you randomly pick, including blue chips, and I would wager you that 80% of them have the same percentage of off exchange trading. That's just how the market is these days. Doesn't mean anything, in my opinion. And why do I say that? Because I've looked at dozens and dozens and dozens of randomly selected tickers, and they all had, with a couple of exceptions that were in the 30s, they all had super high off exchange trading. You're just going to have to speak really loudly.
All right, I'll see if I can.
I don't know. I mean, it sounds like you're a mile away from the mic.
I am not 100% sure what this is doing. It's,
So I hope the AMC keeps going up. I think I was going to say our kind of thesis is AMC wants to hold off as long as possible mentioning anything about a proxy to let good news build about the box office and bring the price up and get everybody feeling good. Maybe all the way through Q2 earnings. Feeling really good. And then drop the news that, hey, by the way, we'd like to have a little insurance in our back pocket. We promise not to use it. Look how good things look. It's green as far as we can see. I mean, that's kind of our
can you hear me,
working
my
theory,
friend?
but I don't know. You got any thoughts on AMC when they're gonna hold their shareholder meeting, Sparky?
Yeah, can you hear me?
We can hear you. It's just
I'm
like
really delayed. All right. I think they will announce a vote for a stock issue probably, if not at this meeting, maybe in July. Get a good couple months behind it.
I'm reading his lips. I
You
think
know,
he's
during
saying that they're going to have the annual meeting in July. we might be better just having you type in the chat, Sparky, because the volume is just. Let me see if there's anything I can do
I'll
on my
jump in.
end. Sorry about that. We'll just have him give his thoughts in the chat. Yeah, he needs a headset. Blazing, you still up there in Canada? The Arctic North. So the question everyone wants to know, and I don't have any answers for you, is when is the annual shareholder meeting going to be, and what is going to be on the proxy statement? In the meantime, as long as nobody says anything, I think that, maybe AMC gets slightly pushed up because of excitement over box office and the fact that Goldman Sachs is pretty much done selling those shares that AMC gave them for the ATM Ford contract. So Sparky and I were talking earlier today about the AMC bond prices, though, have been going down a little bit. And that is, we don't want to see the bond prices getting knocked down, because that means that it's not getting knocked down so much that like, oh, they're paranoid about the June lawsuit. It's getting knocked down a little because they're starting to price in a little bit of liquidity risk, the company running tight on cash. How many shares did they sell? I forget. AMC had 50 million shares. Some of them they sold at the market. The bulk of them, I forget the number. Let's say 35 million. The bulk of them went to Goldman, and Goldman immediately paid AMC for those. And then Goldman had up to 6 months to dispose of those shares. And there was a filing a couple months ago where they had like 25,000 left, and then a filing in the last week where they had, at the end of March, I think, just like 4 million left. So now what? We're in May. If you look at that slope of from February to the end of March, they got rid of 20 million. I think it's reasonable to presume that they probably have gotten rid of all of them. There are a lot of people telling you guys that Goldman's going to hold these shares and go long. No. I don't know why people always think that. Like in every offering, they think the sales agent is on your side. They have a job to do to move shares. If Goldman wanted to go long, they would just buy shares outright. An ATM is to raise money to sell shares. So I don't, whatever allotment Goldman has, I think they're done. And so all the dilution, I think, is in today's price. We're done for the December ATM. Sparky says, sorry, trying to do on the fly. I think if AMC sees Q2 as being really good, they may wait for the annual meeting, hoping the stock runs up. See, that is the same general kind of theory we were talking about in the Discord over the past week. We're kind of thinking the same thing. Yeah, I mean, that would be the smart move on their part. Let people, Q1 was bad. It stung. We knew it was going to be bad, but it still stung everybody mentally, emotionally, in your special place. It stung. So let Q2 box office and a stellar Q2 earnings report from AMC get put out, and then have the annual shareholder meeting. That'd be the smart play if they are really playing strategic chess. Will they do that? I don't know. They don't tell me that stuff. They don't tell me jack shit. They don't even answer my emails. I know a lot of people think AMC feeds me info. I'd say 75% of the time, if I write them an email with a question about a DD item or something on a 10Q, 75% of the time they don't answer me at all. And the other 25%, they say, everything you need to know is in the 10Q. That's all we can say. Onwards and upwards. They're really not much help. But at least they answer sometimes. So far, GameStop has answered me 0 times of any email I've sent them. 0 for, I forget how many emails I've sent their investor relations. Lando says indicators are starting to curl up for AMC. Yeah, let's look at that real quick. On the 1 hour, yeah, the 50s moving up there, about to cross the 200. That looks good. On the daily, not quite the same story there. Got a big gap. It's bullish if you look on the hourly. When I start going further out, we got a long way to go, but a good quarter can change things really fast. A good quarter married with no dilution on a proxy, I think maybe changes things even more bullish. So I'm going to cross my fingers and hope for the best outcome for everybody. Anya says, what if you call them on the phone? I don't have their phone number. I think only the Project Popcorn people have Adam Aaron's phone number. So I don't know how to get a hold of them on the phone, Anya. They might think it's Taylor Swift. Yolo Ono says, Tony's on AMC's blacklist for applying for the CFO job. I applied for, not for the CFO job, but those of you in my Discord know, just for fun, a month or 2 ago, they had a financial analyst job, and I applied for that. And they waited. They reviewed my application for a month. I've seen other people apply for jobs at AMC, and they get an automatic bounce back email. We've reviewed your resume, and we've decided to go a different direction. I didn't get the automatic bounce back email. They waited, I don't know what it was, 3 weeks. They probably reviewed a bunch of my videos and said, fuck this guy, not bullish enough. But that would have been fun. Would have been fun to go see the inner workings of the most inventive financial survivor of this pandemic. I know a lot of people are mad about everything they've done, but I mean, if you talk to any bond traders, they're going to tell you it's a marvel, everything that they've done. And if they get past this June lawsuit, one more notch in their cap for figuring out ways to legally slide through everything and stay alive. I am not holding any XRP, Six Sun. Anyways, yeah, they eventually sent me the we don't want to hire you right now, but feel free to try again in the future. Can you imagine me moving to Kansas or wherever the fuck they are? It's a whole new world. Sparky says, see if I can get in. All right, let's check you out, buddy. Hello?
Hey, I think
A little better.
I doing it on my phone.
We got a little bit of clipping. Are you on your phone now?
Yeah, I turned it on my phone.
All right. Well, that's better for sure. Better than it was. Let me turn off this screen.
Yeah, see if that works a little better for you.
Yes, I can hear you pretty good. Hopefully the audience can.
Okay, great. I won't be able to see any questions or comments or anything. So lay it on me. What do you want to know about AMC bonds?
We were discussing this morning that the bond prices, especially like the 10% 2026 bonds, have degraded in price from above par value at the end of 2024 to slightly below par value now over the last 5 or 6 months.
Yeah,
right? Do you remember what they were trading for at the end of 2024?
Yeah, they got to like 103, which was down to almost like a 5% yield or something. I mean,
and now they're at what, like 93?
No, they're higher than that. I want to say they're 97, which was, I mean, they're really short, so that gives you like a 12% yield, I think. But it's a little hard to just judge it by that, because a point in dollar price on a bond that's only 18 months is worth a lot. What I can tell you is the next bond that comes due next month are trading virtually at par. Those are only 5 3/4, so people are pretty comfortable those are going to get paid off.
That's the 59 million in principal that's due in June, right?
Right. Yeah. So nobody's worried about that. And then they have if I remember, they have an August maturity and I think a November one or something. And it's the last, or it's October. That 10%er still isn't at totally distressed levels, but I mean, it is trading. I look at that more of, okay, let's say they, instead of going the stock route, they actually tried to put a debt deal together, just 2-3 year financing, something like that. Well, if the existing 10s are trading at 12 to 13% yield, I mean, they're not going to issue a new issue tighter than that. So that's what I kind of look at. And you were asking me about.
Well, here's really the question, Sparky, because a lot of people want to believe, and I don't know the answer, that before August of, I think it's August of 2026, that next 195 million is due.
Right.
That AMC is going to refinance and push that out.
Yeah, but see, the thing is, that's what I'm saying is I don't think they can refinance anything without an equity shelf. It doesn't mean they have to sell shares, but the cushion you have as a bondholder is, even if numbers are better for the next 3/4, the next year, let's give it that. The next year.
Before you go into your explanation, let's make sure everybody in the audience is keeping up here. When you say you don't think that they'll be able to do a bond refinancing without having an equity shelf, the company is effectively out of common stock.
Right.
And they would need to get some approval from shareholders to at least have the ability to have an open shelf offering.
Yeah, because if you can remember the last time when they did that, in fact, this is a great example. Forget the convert. I'm talking before that when they did the 7.5s of 29. I think that was a 5-year deal. So they did that maybe a year and a half ago or something. I can't remember if that was beginning of 2024 when they did that. I'm pretty sure they had a share shelf, so they were able to go out and issue that bond because it's a backstop. Again, it doesn't mean they have to go sell.
Right.
equity,
That was my next question. Can you explain to the audience why a lender, who will become a bondholder, why do they care if AMC has an open shelf or is out of shares?
Well,
And the
because
answer is
that's their form of getting paid back if there's no cash flows or lack of profits or positive cash flow in the company.
it's their
that's how they're going to get
insurance
their
that
money.
AMC could go into the open market and raise money selling shares to keep them getting paid.
Yeah, and I mean, the only thing I'd point to is that issue. I think it's January of 2029, 7.5 coupon is trading at 80. That's trading at 14%. Well, that's the same thing. You talk about an equal structured, bond. If the existing bond in 29 is trading at 14% yield and a big discount, you're not going to issue a new one. You're not be able to go issue a new one at 8% or something. Now, the other thing that I remember, it was interesting. We had this conversation before they did the last convert, and if they have a shelf, it allows them to at least go test the waters and see if they can negotiate a new convert deal. That's certainly a lower cost in terms of interest expense to the company if they want to borrow money that way without actually having to sell any shares. It is long-term dilutive, just like the last one is, but it's the same thing. I think the last convert deal is only like 400 million. I say only, but if they got a nice $200-300 million shelf, they probably could go borrow 200 million in a convert with only maybe locking up 80 million shares or something. And that convert bond's trading in the 90s. It's probably a 7% yield. Well, they probably could issue a new one with a 6% coupon again at some kind of structure. So it's all the same thing. It's just they have flexibility to do a lot of different things if they have shares behind it. They can put, and not 50 million, 100 or 200 million or something. It gives debt holders some cushion and some some comfort that even though they're a triple C company, if they do great this year, great. And in 18 months from now, if things are a little tough again, if they can go sell shares to raise even a small amount of money, that makes a world of difference to a bondholder. And they just don't have that at all right now, not having any shelves. So I think you and I had this discussion a little over email, but it's, if they think they're going to really do well to some, Q2 is going to be really good, maybe even better. They have the numbers. They kind of know we're halfway through it where we're sitting. If they think that's going to be really good and it's continued into Q3, they probably can hold off asking for it. I think what they should do is whatever their, with their upcoming releases, they should say exactly that. They should say, hey, we looked at doing stock. We don't think we need to ask for a shelf right now. If we do, we'll come back for it. I don't know that would be a negative thing.
Right.
I mean, it's trash
for a lot of people, the very loud vocal minority there. It's going to be a fight, right? There's going to be the supporters of the company who recognize that, having that security of being able to do a shelf would either, would, as you said, give them some ability to maybe refinance that debt coming due in 2026. But they're not going to trust the company when the company says we're not going to use it, though.
No, you're right about that, but it still would be, it's still something they could say to maybe lessen the impact.
We're going to come back to that same alternative, the company's out of shares and low on cash. If something were to happen, they've got 250 million in debt due in the next 12 months. Depending on what cash flow is, they could be, let's assume they didn't make any profits for the next 12 months. They would burn most of their cash by next summer.
and
paying off debt.
At that point, I never looked, specifically what some of the bond covenants are, but my guess is they can't get down under 200.
If I recall correctly, going back to the archives in the back of my brain, they have $100 million minimum liquidity.
Right, I was going to say, I thought it might be 200, but even at 100, if you have 380 now, and at any point in the next 6 months, maybe you just have a little low spot, or you have to fix something, that's not any cushion to start doing that.
Yeah.
And the problem I see is if they don't get at least the vote and get the shares in the shelf, the hardest time to go ask for that is if they get close to where, let's say they get down to 200 million and they have some cushion for covenants. It's really, what's the stock going to be worth if everybody knows they're going to come ask for it?
Do you think if they asked, here's a spicy question. Do you think if they asked for more shares and shareholders voted against it, would they have a plan B with preferred, or would they just say, all right, you guys want us to roll the dice, we'll roll the dice?
Well,
or
I
would
think
they just,
I think
or
they
would they
try,
just Chapter 11 the shit co?
I don't think they go chapter. I don't think they go Chapter 11. But what
I'm not saying Chapter 11 the whole company. I'm saying Chapter 11 the one with no collateral.
Oh, they could, but I think that's. I think you'd lose all faith in you as a corporation along every year if they did that. I mean,
I know. I mean, none of those are great.
That's not. I mean, I would like to think you were talking preferreds. I mean, this is already a guy, and I don't blame. Everybody hates AA. I think what he did with Ape was kind of evil for shareholders, but it was evilly brilliant. I mean, he didn't have any options, and he came up with a pretty wild one. I'm guessing he would equally try to come up with something like that before, but who are you going to get to buy it? Then you're dealing with the bottom of the barrel hedge fund kind of guy again, and they're going to want their 200 or 300% return on that, and they're going to be buying warrants or shares or whatever it is at 20 cents, not $1, and that help shareholders either.
I think it's safe to say it's going to be a nail biter the next 60 days as we wait to see what lies ahead.
Yeah, and I'm not long, and now I have traded in and out of AMC a couple times, but I think like you, I just want to have them give some kind of indication of what direction they're going. And it's the good thing for them, and I'm actually surprised about this, is I think box office has really perked up. I think that's surprising for the good of the thing, and maybe it sticks around for more than a couple quarters, but in AMC's case, they had a quarter last year. I think in the last 2 years, they've had one quarter, and it's been the second quarter where they've eked out a 7 or 8 or 9 cent a share profit, and that's great. But they need a year where they at least break even, or maybe make even a piddly, $20-30 million to open up financing and not having to sell shares, and also not burning cash. I mean, that's their challenge down to under 400 million. Even if they have some cushion to the bond covenants, that's still not much. It doesn't give you anything.
I need to go look at Q1 next year and see. I know we have Avatar and one other movie carrying over from late December into January. I need to look and see if there's any chance in hell at all that Q1 could be a profitable quarter, because it would be cool if they had 4 consecutive quarters that you could add them all up and say this is a positive number.
Yeah, and I don't think, like I just said, I don't think it needs to be even a big number. If they can just not burn $100 million in a 12, then that 378 million in the bank doesn't look great, but maybe they add to it a little this quarter. See, that's what I think they're looking at, that they don't owe anybody talking about. But I think if they get closer to the end of June or middle of June, a month from now, and they say, hey, we're gonna, we might make 40 or 50 million this quarter, that's a lot easier to go out and talk about doing any of this stuff. I don't know that they, you tell me, because I'm not a stock guy. I think even in June or July, I think is what I told you, if they look like they're going to have a good quarter, I think they can go out and announce, hey, we're going to have a share vote. I don't think they have to, or if they have to call a special meeting or something, they'll
if things go really well, Sparky, and 40 or 50 million might be a low number for net income.
But that's what I'm saying.
We just don't know. I mean, we got to have some movies outperform expectations. I think 40 or 50 is reasonable, but it could be higher than that. And
they can do some, I mean, I always hate to see financial engineering, but I mean, they're ordering Coke machines and all these things that I think are very, that's an enormously profitable part of their business. But if, so they pay for some Coke machines in Q3 instead of Q2 or something. I mean, there is some wiggle you can do. You can't get 50 million out of it, but you can squeeze probably
you could 5 or 10 you million. Could push some of your CapEx out to Q3 instead of Q2, right?
No, that's what I'm saying. And it does all catch up.
Make that free cash flow look really juicy to those shareholders.
I think there's a chance because Q1 was so bad. And you and I talked about this, and I wouldn't blame them if they did it. They may have front loaded some payments in Q1 because they knew it was going to be awful anyway.
For sure. I mean, if you know any CPAs or you've talked to anybody in the corporate world, that is absolutely a thing. And there's nothing illegal.
No, it's totally legitimate because all that happens is it does come home to roost. At some point you got to catch up.
That's why I said in December and January, guys, don't listen to these people that are doing cartwheels over Q4 positive free cash flow, because it is going to come to bite you.
Well, that was particularly a big, that was like 200 million or something. That was a big thing. I think they could benefit, like you're saying, if everything's going great, just move enough to give them another 10, 12 million bucks. So you're not really capping your knees on Q3, but you can legitimately make that number look a little better, and then go ask for.
Yeah. I mean, I think that would be a smart move on their part too. Carefully manage CapEx in Q2.
And they're the ones, by the way, that know that. I mean, you and I can, you have your models and you could put in box office and you could project stuff, and you're normally fairly extraordinarily close, but they really know probably day to day.
Oh, absolutely.
What it looks like. So I'm not so sure that's maybe, he drives me a little crazy with some of his cheerleading stuff when he chirps all the time. I actually think if he's doing well, he ought to shut up and make a bigger, better announcement when he can actually say something substantive and not just something goofy. I mean, but that's just me. I mean, that's maybe he feels like he's got to do that to keep some retail people engaged or something. But
JP, let's wrap up this live stream with his question on Finger. Have you looked at Finger at all, Sparky?
I haven't. I think the only thing, like you, I think I missed it. I never would have looked at it at $1. I remember looking at it thinking, this would be an interesting play to jump in. I think for me, the problem with that is there's so much pumping on it. First, anytime something goes up, you get pumped. But I think the move are on. It's only like 7% short.
The short interest is like 5 or 7%. Yeah.
And it must be fairly tightly held because everybody's talking about
cost to borrow is extraordinarily high, and it's a hard to borrow stock. So yes, I presume the same thing. Everyone's saying, well, the reason you can't borrow it is because of naked shorts. Guys, if there were naked shorts, it's not going to affect the supply because they're naked. Nobody's tracking them. Like, use some logic with what these pumpers are telling you. Sorry, these promoters. Naked shorts mean you're creating something and you don't need to borrow it. A naked short does not drive up cost to borrow.
Yeah, I think that's
horse shit.
$5 or $10. It's not.
You're clipping a lot. You're clipping as you're moving around.
Close your.
But to answer your question, JP, the reason it's moving up is there are not a lot of shorts in this play. yet to suppress the price. There are a few retail shorts that keep on coming to try in. I see them on Twitter. I would not short this stock.
It's not a very big company either, Tony. It doesn't
Right.
take many retail dollars. to push it
The
around.
volume is pretty low, a couple million shares, a couple 100,000 shares. It's easy to move a stock like this. The total float, free float, 41 million.
Yeah,
I mean, it's easy to move a stock but at some point, the shorts will come in this play and they will crush it. That's when you know that the shorts are really in this play. Right now, hey, let it run up. The more they let it run up because of FOMO buyers, the more money the shorts that come in are going to make when they decide to stomp this thing out.
well, and I'm thinking they on them pick a price, sell, we'll go rate dollars or something.
So, yeah, I mean, it's not a fundamentals play. It's a momentum play. I don't hate Finger. I bought Finger in December at $1.23. What I hate, as I said at the beginning of this live stream, is people lying to you about data and telling you that this thing's going to $1,000. I want to see you end up this week or month with a smile and some money in your bank account, not crying because you listened to someone and bought it at $7 and then got wrecked, and now you're stuck for the next 3 years.
Yeah, I don't think it even starts to knock it down. I think the company is final crazy.
The company's not a horrible company. I mean, I know Capybara put out a report on them. I don't care about that. I can't do anything if their books are cooked. What I can do is look at their books and see they're not, of all the plays that have been pumped ever, this one's not horrible. They have revenue. They're growing. They have their tentacles in different little revenue streams. It's not a horrible company.
But they be opportunistic.
But they need more. They are very clear in public communications and filings that they need to raise more money to continue growing. And that is what no one will talk to you guys about. That's why I said last year, there's going to be dilution in Finger. Wait for it. That's what I did. And then I bought in. There will be more dilution in Finger.
And
it's not a if. It's going to happen.
Yeah, it would behoove them to do it.
Who's what?
I said it would.
Behoove them. Yeah. That's why they're paying promoters to push the price up, I think.
Could be.
All right. Feek is saying that you have an echo. I don't hear an echo. It might be coming from me, maybe.
No, I think it's me. I'm not sure.
The worst company ever is Mullen JP. Yes.
Yeah.
Because I want to be clear with Finger and GBUX and all of those. I do not short stocks. No one has ever, not a single time, paid me for anything that I've said on this channel. And I bought Finger at $1.23. I've only ever traded this stock long. If it gets really, really up there in price, I might buy puts, and I have in the past on Finger. But that's not even a slam dunk because the IV is through the roof, and it might not fall fast enough for you to make a profit on puts. So that's not a strategy I recommend. You got to know what you're doing and know how to analyze it. But as far as any trades I've ever taken on Finger, I've only ever played it long. And the only thing I care about is that you guys are getting honest due diligence and real data. And I as the days go by, I see these people making up more and more fabricated stories to keep pulling people into the play. And that is upsetting to me. All right, Sparky, you got any final words briefly?
No, could you listen to what AMC GME is and don't get the hype? Pay attention. Still can make.
Thank you, Sparky, for dropping in and sharing your insight on why AMC might need why it might help them to have a Open S3. That makes sense to me. We can talk about that on a later date, maybe if we ever get to that point. I don't want to belabor the whole thing. I really just let's just sit back and see what they do.
I think
and guys, thank you to the channel members. Welcome to the new members. I have a Discord link in the video description if you want to come. I don't do a lot of live streams lately because I'm tired of arguing with people, but we have these conversations all day, every day. Any question you want to ask, any ticker, no bullshit, no hopium, just this level of DD available to you about 15, 20 hours a week whenever I'm awake. If you want that sort of information, the Discord is open to anybody. It is free, but some of the rooms where we talk about more controversial tickers do require a paid membership. I'm not in the free rooms very much. Occasionally, I'll pop some thoughts of the day in there, things that we're looking at, but ticker specific discussions are behind the paywall. Anyways, I want to encourage you guys to find if your group of people is the conspiracy naked short people, and that is making you money, and you've never bagged hold, GTII and BBIG and MMTLP and BBBY. If you've been able to navigate everything following that crowd, keep doing what you're doing. And I wish you all the best. But if you're struggling figuring out who's reading filings and trying to give you a non-emotional take on things, that's kind of what I view my role as. Do I get everything right every time? No. Nobody gets everything right every time. But we try and keep it no emotion, no preconceived outcome. Read the filing, talk to smart people, way smarter than me, assemble the DD, and then put our heads down and think about it. One thing I've got, a lot of free time to think about this shit. Anywho, thank you guys. Have a good night. We will see you hopefully in the next day or so. I'll get Mediocre on here and we will talk about Aspen aerogels and whatever else news of the day happens Friday, Saturday, Sunday. Have a good night. Get some sleep. We got to be up in a few hours for pre-market.
Let's go. Yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never